The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman. This is the Wednesday edition, Wednesday, November the 28th. Almost wrapping up November. We're going to see where the markets close out Friday, 4 o'clock, to see what happens in the monthly charts. Going to be really, really interesting. So welcome back, Steve Rhodes. Did great 2 hours, and nice to have you back following me. You got Larry Pesavento, the artist, the writer of books, author, and certainly one of our great assets here at TFNN. Another great asset that comes straight after that. A relative newcomer. We've got the diagnostic trading hour. You've got Daryl Martin doing a fabulous job there. It's just a fascinating program. To be able to define your potential loss and be able to take an educated position. Educated meaning you've thought out the possibilities, you've weighed the advantage against the disadvantage, and to know exactly what your loss is, and you've got a time limit so that anything can happen and swing up, down, and then finally that last trading moment you might be able to, even if wrong, you might be able to salvage quite a bit of the liquidity of what you put in. So it's really, really good. Then, of course, you've got Dave White, with his power vector indicator. Just had some really good trades, good eye. It looks at longer-term positions, and I know that he had a fabulous position. I heard him talking about the short on the S&P recently. Nice. Good job. Now, what I think is quite important right now, I want to finish it up. Then, of course, you've got Ken Shreve, a master of the Investor's Business Daily techniques, as well as his own refinements, and just really fascinating to see how he takes these breakout stocks. And I do a lot of work with Investors Business Daily. I've done it for years. Sometimes I treat them as positions that are giving me a heads up as to a sector. As I discussed, I even asked, I believe it was even Ken that when he was working there, I think I even asked him when I interviewed him once, when I subbed for Tom one afternoon, back in 2007. And I asked him about oil, and then I asked him the same question about the housing sector, and I said, is there an indicator that's been developed by IBD that at a certain point, if within the top 20 or maybe the top 10, you are getting an abundance of a particular stocks in a sector, does that give you a clue as to a top, or does it give you a clue as to the power of the movement still to come? And he kind of misunderstood my question there, so I never really got that answer. But that's a question I'm still putting out there for Investors Business Daily. You've got all that incredible data. I mean, this is how all that that work was developed over the right at the very beginning. And when you talk about stock information, index information, commodity information, just general market information, I don't think there can be a better resource. I don't care about any of the brokerage houses. I think that Investors Business Daily, Neil's done a fantastic job. So I've always had great respect for that paper as far as the stock market analysis is concerned. So that's Ken Shreve at 3 o'clock to 4, and then 4 o'clock to 6. Of course, Tom O'Brien wraps it up. Tom O'Brien has written 2 great books, and Time of the Trade books, and coming in right at 4 o'clock to 6 o'clock to wrap it up and give you his assessment of what's going on. So, with that said, let's just go through the numbers. The Dow is right at this particular point, having been down 108, I think it was. I'll tell you exactly what it was. The Dow was, let me go to this, I need to stick on this page because it's got all the indexes. So the Dow was at some point this morning at 12,765. Wow. that was right on the 50-period exponential moving average, and then no. This is a new indicator that I'm testing out. A new, is that the 9? Wait a minute. Whoa. This is the 9. What is this little guy here? Oh, you know what that is? That, very interesting. That's the 9-period simple moving average. This is the 9-period exponential. Oh, I love putting the two together. I use them and then I forget which one it is. So, I mean, which moving average it is. So the Dow held that, sprung back, and I'm a little embarrassed. We had yesterday. We went long 2 days ago. The DDM is 200% long the Dow. I put in a really tight stop this morning, and I'll explain why. I could have kept the 1-point stop I initially wanted, but I wanted to have way less than a 1% risk. Because I figured if the market did come back today, and my gut feeling, based on one of my prime Dow Quartet my Dow Quartet, I call it an index, but my Dow Quartet pilot light stock, UTEX, I'm so upset about this as well. I wanted to buy the 80 call, December call on UTX. That's what we had planned. I wish I'm going to just stop listening to the news. I should not be doing that. I did so much better for about 3 weeks when I just decided I wouldn't do it. I'm going back to that because that was the plan. The plan was to buy the December 80 UTX call, option call, on a pullback. And what did UTX do today? UTX did exactly. It pulled back to 78.37. I haven't got it right in front of me, but that option call would have been just a real bargain. And now look what's happened. You've got it trading at 79.49. Well, that's the way it is. Don't be afraid. Don't just put your, Larry always talks about this. He says, you assess what you want to do. You wait for it to come in. And then you put in the trade and you know your risk. And if you can have a much better reward to risk probability, that's the trade. Well, that was the trade. So the idea with my DDM was this was a little different. This was something that I did not want to pull back. And there was a certain level that I looked at. And I thought, if it did pull back to that level, I don't really want to risk the market closing there because I don't give updates during the day. I didn't want to risk tomorrow to be a pullback for a deeper correction. That's what I was thinking. Now, I don't know if the news would have influenced me or anything like that, but there was like, a 50 cents, something like that, a loss on a $68 stock. That's, what can you do? That's nothing. However, one of our stocks in my opening call is on a tear. It's up 3% or more from our buy point just a couple of days ago when the market has been down all over the place. And this is what I've been saying, and I'm going to stick to it because it's absolutely imperative. Do not be afraid to go short stocks. We are short. We went back into a short position today. So far, that short is looking okay. And we have 2 long positions. So the one long position hit an all-time high, a 52-week high yesterday. So it's a bifurcated market. Do not be afraid to go short stocks that are looking weak. Talking about that. Let me just, before I do anything else, Joseph A. Banks. Those of you who know, we've done really well with Joseph A. Banks on the short side for a long time. Last night, when I've been waiting to go short this stock, JOSB. Last night, I'm doing my work. My wife and I were sitting. I had the I don't remember what we had on. Maybe it was CNBC. Whatever it was. And suddenly this ad comes on. Joseph A. Banks. I've never seen this. Buy one. I always make the joke. Joseph A. Banks. You buy a tie and you get 3 suits and 3 suits and 6 shoes, pairs of shoes free. But that's a joke. What they said was buy one and get 7 free. You get 2 suits for free plus 5 other things. I mean, this is really incredible. I forgot to check to see when they're coming out with the earnings. If I knew the earnings were coming out today, we would have had a position on this. I would have had it because I've been waiting. When I saw that ad, I said to my wife, wow, Joseph A. Banks back to short. But this morning it was already down 3 by the time I saw it. But this stock has been an incredible stock. Why? Because it has been the stock that, regardless of whatever you think or whatever you want to do, all the way through from 2000, it's the stock, 2000, the low in December of 1999 was 64 cents. Now, that's been split twice, maybe 3 times. But regardless, it was 0.64. Well, it has been one of the very best stocks. Yep, there was a 48.12 high, and that was pre-split back in March of 2006. So it's at least twice. It could be 3 times. And what's happened is that this stock, if you just held this stock, even to today, at $43, it went to a high of 57.14, which split is about 130. So this is very interesting because it's making the pattern a second dreaded H. And everything about the MACD and the stochastic says this is a hat-trick top. And I've spoken about that already a year ago, that Joseph A. Banks was making, clothiers, was making a hat-trick top. No, Joseph A. Bank. I always say Banks, but it's Joseph A. Bank Clothiers. You've got to say the whole thing. So, yeah, it could rally, but I think it's got a problem. But I just wanted to mention that. And then there was another one that I thought I needed to show. Yesterday we had, sometime during the day yesterday, we had CMGR. CMRG. Yes, CMRG. Is that correct? No. Why am I doing that? Why am I blanking out now? GMCR. Oh, GMCR. Of course I knew that. GMCR. We had a caller who said he had calls, and I said to him, I like while the monthly chart is just terrible, this is Green Mountain Coffee. I said, I think he said either it was long or was he the one of the calls? I can't remember now. But I said there's a peak C that was made, and everything about the chart says that it should go above 30.41 to get leg D. Well, lo and behold, earnings come out today, exact opposite of Joseph A. Banks. And this, so congratulations. I just can't remember. I wrote it down. I just can't remember who it was in the den that asked me about it. I did it sometime during the day yesterday. It went to a gap this morning. It just flew past that 30.40 level. It flew past the 32.70, which was the 200-period exponential moving average. It hit a high of 36.35. Based on what? Based on the ChapmanWave expecting a leg D up. No, based on the earnings, of course. But it turns out that it is a ChapmanWave leg D up, and now you're getting leg C up in the weekly chart. So, with that, let's go. We've got a break coming up. 877-927-6648. Love to take your calls, and then we'll go through the market.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi folks, Basil Chapman, Tiger Technicians Hour, and the Dow's up 27 at 12,905. The S&P is up 73 cents at 13.99. Let me I've got the EWG. If you're looking at Tiger TV and you're looking at my charts, I've got a nice big white chart here. This is a daily chart. I'm stretching it out. This is the EWG, which is the Germany, what is it called? This the iShares Germany Index Fund. Well, it's making a high-level consolidation way above the 9-period exponential moving average, and the stochastics at 92%. I like what I see right at this particular point. So I just wanted to bring it up because, hear about Europe, but look at this Germany chart. It's right back to where it was back in April of this year, back into the 23 area, and the monthly is actually improving quite a bit. So I thought I'd bring it up. Now let's go through the numbers. Whoops. There we go. So, get rid of that. I don't want you to have too much white here. This is what I want you to be looking at, this particular white chart right here. There it goes. So we'll do this. I've got it. Okay. So this is the daily charts. So we'll go through the Dow, and I'll just explain what I'm looking at here because this is a critical period. The stochastics only at 59% of the Dow. The MACD is still good. It's popped above the 9-period exponential moving again. It's challenged by the 200-period moving average. If the Dow, regardless of what's going on, up, down, all these politicians, the bias of the market, as I see it at this particular point, still has an upward bias. But that upward bias is going to change if we've already gone to one very critical level, but it was intraday. We went underneath 12,800, went to 12,765. If the Dow closes any time between now and Monday below this candle low, the low of 12,701, that's the candle of the 20th, that would say to me, be careful, there is an H pattern forming, and then there's a good chance of retesting the 12,471. This could be the surprise. If, in fact, there is a bounce, and this bounce takes the Dow, and on Friday's close, I'm going to do the weekly in a moment, but I'm saying by Friday, if there's a close above 30,011, but not just a close above, I'm talking about 13,028 or higher. So in other words, I want to get into the 13,000. I want to break nicely above the peak A. If that leg B starts, I have to be looking at that very ugly candle of the 7th of November, 13,228. Up there would be the target. So those are the parameters I'm watching. I must include the VIX right now because it's very important. The VIX has had a rally, but that 200-period moving average was a repellent line, was a magnet line, and it's turned in lately to be a repellent line. It'll become a magnet line if the VIX gets anywhere close to the 1735, 1755 area. All of a sudden, the 18s to 90s is going to look really attractive. At this particular point, if by the close today, the VIX falls after bouncing in leg C in the 120-minute chart, if it breaks down and goes underneath 15 points, 65, closes somewhere around there, I'm going to be thinking, you know what, based on my pilot light indicator, UTX, and that option that I missed, it's okay, there's always another trade. There's always another trade. But based on this UTX action, it is there's nothing wrong. This is a beautiful looking chart right now. But UTX needs to clear 80.39 and it's a 79.62. How can I hang my hat on one indicator? I'm not. It's on a whole bunch of things. But this particular indicator right now, based on 1, 2, 3, 4, 5, 6, 7, 8. 8 very strong candles in a sector of the market. Technology, no, not high tech. This is the industrial sector. I have to consider that that's very important. I have to consider that the weekly chart is now about to break the downtrend line of that falling axe formation that I call in the ChapmanWave. What is a falling axe formation? This is the falling axe formation. In my webinar that's coming up, a 2-day webinar, that's chapter 24. So slide down there. You can search for it. Yeah, there's a search engine as well. You just go chapter 24. This is what you get free. $249 value. My book, my CD book called Introducing the ChapmanWave Methodology. There it is. That's the falling axe. It looks just like an axe, the handle and the axe blade, declining cone formation. Look at that. And then it powers higher. So that the whole way it's explained and everything, that's very important. And this says that if UTX is able to climb above, certainly above 80.39, the high of the week of the 2nd of November, that's going to say there's a chance that UTX could go to leg D. If UTX goes to leg D, the Dow is hardly likely to break down. So I'm watching this really closely. UTX turns around in the next few days, breaks under 77.50. It's not a good pattern. We'll go through the other indices as we move along. Don't forget, go to the front page. I'll get it right here. The front page of TFN, it must be right here. There it is. Front page of TFN, new Master Traders series. I'll be right back.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. While we're at the break, I had a question about EFA. I don't usually follow EFA. This is, in fact, the iShares MSCI EFE, EAFE Index Trust. So that's European outlook here. And look what's happened. This is the ChapmanWave falling axe pattern that I just spoke about a moment ago, right there on this weekly chart in the middle. If EFA, this is peak A, B, C, right there. Let me just type it in, and I'm going to go to all the numbers in a minute. Here we go. A, B, C. If EFA breaks above, it's trading at 54.23. If it can get to the 55.02 area, there's a really good chance that it's going to break above 55.58 to make leg D up. Hey, if it does that, then the weekly chart, monthly chart, that's the weekly chart. Suddenly the weekly chart's got this W pattern, which is really positive, and that terrible candle from the March of 2012, you break above that, and that's very positive. Breaks down, this pattern can also be a breakdown pattern, turns into that H pattern, so you've got to be careful. All it needs to do is break under 53.20, and it's starting to fail. So those are the parameters there. Now let's go through this. So I did the Dow. Let's just run through the SPX, because I've got my a week from tomorrow. Folks, if you're really interested in learning some of these techniques that I talk about, they are potent they are really, if you're able to recognize them, I mean, that's why we had a long stock in my opening call that has reached 52-week highs when the market was very choppy on the downside. It's been going up. The shorts that we had, we took profits in those shorts. We just added another short based on this particular technique this morning. So far, it's acting well because it's down. Short, you want it to go down. The UTX trade would have been great. I didn't take it, but that was I should not have been afraid of it. That was the trade. The stock that we bought just 2 days ago is up. Oh, it's up even more right now. It's breaking out, in fact. So these are techniques you want to learn. So let me just do this. The SPX has this candle is going to be very important. The day is not even close to be done. We're just 2 hours into the day, and all these politicians have to still talk. So what I would say is if the S&P breaks back underneath 1393, right now the S&P cash is at 1398.45, made a low this morning of 1385. Well, if it's able to close in anywhere in this area, 1396, I'd say, preferably just touch 1400.20 would be just perfect, because then I'd say great chance to make leg B up above 1409.16. Now look, you remember the falling axe pattern I was talking about? Look at this. You've almost got the same pattern here that's unfolding. That would say the S&P, to really show that it's got strength and it's going to be able to overcome all this negativity, it's got a long way to go. It has to really break above 1436, let's say 1439, to really show that it's got this strength and tenacity to be able to go even higher. So that's a long way. Let's go step by step. Now let's look at the Qs. Remember the Qs? I said the Qs have held really well. There's the 200-period moving average. There's the 9-period moving average. Well, the 9-period moving average is at 64.38. It hit this morning 64.25, and now it's trading at 64.94. Everything about this says that the stochastic is still strong, the MACD is still strong. I'm a little concerned that the on-balance volume is not giving me the kind of action that I'd like, and the weekly chart is not that great. But the monthly chart is held. It went right to the support level of the uptrend, inside track support, but the MACD and stochastic are saying, okay, wait for the end of the month. Wait for Friday, I believe, is the end of the month, because this is going to be very important. Now what would be great, if you all want to be long, is if it goes above 65.40, that starts leg B up. But that leg B into the gap and has to really climb towards the 66.17 area. That'd be very positive. A lot of ifs, but so far, if you had to ask me which way I want to trade the Qs right now, I'd say the bias is up. Now look at Apple. Apple's very important. Why? Because Apple pulled back under the 200-period moving average, held above the 9-period moving average, stochastics at 86%, MACD is good. And you know what? It's producing this pattern that I call, the reason why I put the stochastic under the MACD after many years of juggling around is because I noticed, this is like 20 years ago, that the stochastic gives a technique that I call the squash. We'll be looking at that and studying it. If you go to my webinar coming up Thursday and Friday, a week from this Thursday and Friday, all day, 8:30 until 5 o'clock. We will go through this in such detail that you will be prepared to really get a sense. I'm going to give you just the techniques that I feel in the ChapmanWave are pertinent to our next move in the marketplace, number one. Number two is I want you to learn the A to B to C to D. Peak A, peak B, peak C, peak D. What happens after D? I want you to learn round numbers, how to look at them. I want you to learn silent candles, silent round numbers, as well as the ones that you can see very blatantly, like Apple's beautiful, tiniest doji candle. In an entire month of September, the week of the 21st of September, Apple only traded between 705 and 693. The tiniest move that it had since way back in July. So that was right at the top. And that says you've got to be very careful. Very careful. Why? Because that little doji gives you a bunch of information. It says, yes, Apple can rally, and Apple could very well, with this squash, could rally very strongly. But that whole area between once it gets to 605, that's going to be the real test. Yeah, once it gets, if it gets to 605, that's going to be the test. Because if it breaks above that, it could have a really nice rally to the 617, 622 area. So these are going one step at a time. Now, as far as the, so that was it. Let's go to the IWM. The IWM has had a tremendous move. Leg A, today is the first day that I can talk about a peak A, although it still hasn't closed. The day hasn't closed. I don't think it's going to get to 81.23. Who knows? But 81.24 will start leg B. If the IWM breaks, whoops, get rid of this thing here because it went way above that arch that I'd already put in. If IWM, the I shares of the Russell 2000, start to break into the 81.38, get into the gap from the 81.37 high bar of the 7th and the low bar of the previous day's 81.97, it gets anywhere into that gap, that's going to be the big test of strength. But in the meantime, stochastic is rallying, on-balance volume is rallying. The weekly chart is still not very good. The monthly chart is holding well. It's not great technically. That is with the MACD and stochastic. But the proof of the pudding is if it can get into the 81.50s to the 82s. Because if it falls below 78 at any point in the next week and a half, that's going to be very negative. So, okay, that's that. I want you to look at gold. Let's look at the GLD. Now, I've not been, I consider that gold is just in this consolidation area, making this arch formation. The GLD is down 2.42 to 166.29. Most important about it is that this cup formation that I was drawing is almost going to be taken out if the GLD breaks under 164. So 166.32. If the GLD in the next week goes under 164, that's the dreaded H pattern. I suspect it's going to retest the 162s. That's just the way I'm looking at it. Where would I be wrong? Absolutely, if it closes decisively above 170, but then again, 170, 150-ish is very strong resistance. But I don't like the chart pattern in the monthly or the weekly. They are very negative. So my bias is to the downside in the GLD. Let's go on to HG. I'm going to the Z. I don't know if it's still trading or not. But the high-grade copper had a lousy early morning. It's running quite nicely here. The stochastic's at 86%. The MACD is good. It's just not going anywhere. It's peak A, peak B, peak C. I would love to see high-grade copper trade into the 350s. Just touch 350 at some, not 350, I'm sorry, 355 area. It's already at 350, 352 in fact. I want to see it trade at 355 to get a little bit of confidence that it can trade into the 359 area where the 200-period moving average is. But at this particular point, the price is not. The technicals say that it should be much higher. It really should be in the 357 area. So this is, for me, this is a potential negative if high-grade copper is going to fail. So I'm going to emphasize again, if you're looking at stocks that you like, for instance, we at HOV, Hovnanian, once again, got in at 540. It closed at about 550, 549 yesterday. Great percentage gain. That wasn't good enough. I put in a 5-cent stop. I raised the stop to a 5-cent potential loss this morning. We took the 5-cent loss. Is trading now at 539. Breaking down like that I didn't like it. I'm prepared to buy strength. I don't want to trade weakness at this particular point. I want to short weakness. So I wouldn't short Hovanas. I'm saying that my tendency now, lower highs, lower lows, lower highs, lower lows, those are the stocks you want to be looking to short. Or if they've just made 50 all-time highs, and they're showing potential of a peak F or something like that, hat-trick top, that's what I'd be going for in terms of shorting. So there are many stocks that are looking very shortable, but I am surprised at the number of stocks that are hanging in and holding really well at this particular point. So it's a bifurcated market. 877-927-6648. I just thought I'd throw out that number here just to wake anyone up if they were kind of falling asleep there. Now, I did that. Now I want you to look at the TLT. The TLT is having a nice session. It's up 28 cents. Nice candle. But to tell you the truth, it really should be at about it should be above the 127.19 high of the 16th of November. I think it's just in a trading range. I think that it's the same as the dollar. When I always say the dollar is rallying, but you can't see it because the Fed is pushing it down. So it's wheel spinning. It's using up that energy. And look here again, the dollar couldn't get going. It repelled at the 200-period exponential moving average. So I think it's the exact opposite with bonds. I think that the bonds are being held up by I don't think they said they're going to hold it up. So if that's the case, we're looking at something that is, I don't know if it's shortable really, bonds, TLT, because I think there's going to be a prop to it so that even if it comes down, it'll quickly bounce. So that's kind of the way I'm looking at the market. You have the bonds in a trading band, dollars in a trading band, gold is in this trading band at this particular point, but my bias is to the downside. So let's see. I had a question here. Curious on your thoughts on the monthly chart as we are close in the month interpreting strength in the OBV, but I don't remember what stock I'm supposed to be looking at. So if anyone then could just remind me about which stock you want me to be looking at for that. So I want you to do that. Now the XLF is also in this kind of trading band right now. I can tell you this, that the gap was, you got into the gap from the 20th of November. Nice kind of candle so far today, but it's not a great looking chart. It's just, I have to call it a high level consolidation, and the weekly chart says that the magnet at 16.22 of the 200-period exponential moving average will wear out its welcome if the XLF closes under 15.06. But at this particular point, I'm treating that line as a magnet line. This is the 200-period exponential weekly XLF. That's the financial select financial ETF. The question was on copper. So copper. I'm going to go to the HG contract, and I'm going to say, okay. Now the question is the on-balance volume. On-balance volume in the weekly chart says that. See, this is a series of H's that go to an M pattern, and it looks to me as if copper takes out 3.43 in the continuous contract, there's a real good chance it's going to pull back deeper. It'll test the candle, the Roman candle of the week of the 21st of October 2011, the low of 3.11, high of 3.48. That's the candle. Get into the wick, and that says the close was 3.27. It'll go under 3.27. That's going to be that'll be pretty negative. Stochastic's trying to rally, but it could still deflect a little low in the weekly. Yes, the on-balance volume said that there should be a V-shaped pattern and a V-shaped recovery, but in fact it hasn't had a V-shaped recovery at all in this particular pattern. So I'm just waiting. Copper has to tell me. I can't tell copper. All I can say, it's stuck in this little range. It's not telling me anything. It's saying that so far that there's weakness in the economy based on copper by the chart. But more importantly, it doesn't tell me whether there's going to be strength, and that strength will be continuing. So that's the way I'm looking at it now. Now, there's something else that I was looking at. SF12. SIF12, 13. Yeah, Larry actually just showed a chart of the 60-minute silver chart. I've got the silver, and this one is the January silver. It made a peak D top, and this is going to be very interesting. At 30.81 on the 5th of November, it went to, now, folks, this is what I'm talking about. How many charts just today have you seen peak A, B, C, and D? Yes, copper went to peak A. On the 7th of November, peak B. On the 9th and 12th of November, peak C. On the 14th of November, and a peak D with a sharp drop, the sharpest drop. That's what you expected, a D, at 34.29 on the 27th with today's pullback. I'll talk a little more about it as soon as we get back. Basil Chapman, 877-976-5.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, Then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. Basil Chapman. I'm just double-checking here. Interesting. A, B. Oh, that was C in this chart here. So the SIZ, the December contract, has a slightly different reading. SI. I'm here. I'm just doing a little work here to see what I've done incorrectly. A, B. It's C. I'm sorry. It wasn't D. It was a peak C in the 49.5. Yeah, it's a very fractional new high. Yep, that's leg C in the silver chart. And what was interesting is I went to the I don't know if it's even trading, the December silver chart. And that, because Larry posted it in, he's got 0.618 retracement that it hit exactly and bounced. I've got the 200 period exponential moving average plus the left side, right side price time match. It came in 1 bar late. Boy, 1 bar can make a difference, because the bar of 8 o'clock this morning on the 120-minute chart had a low of 33,675. Try 32.90, the very next bar. So that's very interesting. And what's very important about this is that it's bouncing off the 200 period moving average, and silver so far has actually a slightly better chart in a way than the gold than the GLD. So, but is it better than the GCG13? Let me do that. And that's gone to peak A, peak B, and the 120-minute chart I haven't done yet. Oh, beta, peak, E top, the GCG, and the 100. Folks, these are the techniques that I'm going to be teaching you in this webinar coming up. You get my CD introducing the ChapmanWave methodology. That's this one here that I just explained to you, the falling X formation, plus 27 chapters. Plus, I talk about the moving average, the different moving averages, and I just need to write this down, 9, 7, 8, 1, 4, 7. Okay, and I talk about the moving. I talk how to draw the channel lines, the inside track. These are you don't even need to necessarily know the ChapmanWave methodology of peak A, B, C, D for a chunk of these techniques, because they involve the chart patterns themselves. So sign up, because we want to send you overnight to the CD introducing the ChapmanWave methodology. Once you just begin reading it, we'll be going through it during the webinar, 2 days. It's just it's hours and hours of being able to go over these patterns until I know you've got it. So please, you get a bonus. You get my opening call for a month free. You get a webinar on moving averages. I just threw everything, and I said I love teaching. This is a very important moment, and in terms of important moments in the marketplace, this is the perfect time to be doing something to educate yourself. So let's go back to the different chart patterns. So gold is pulled back and went under the 200-period moving average. Looks to me like gold is acting a lot worse than silver. Silver's got a little bit more strength than gold at this particular time. That's very interesting. It happens periodically. Now, I needed to talk to you about what to be looking for, regardless of what the politicians say. I'm going to do this. Have I got time? Oh, time's almost through. I mean, what is today? Wednesday. I will do this tomorrow. I'm going to show you a chart, and I'm going to say, would you have bought any stocks during this particular period? And then I'm going to show you another chart, and I'll say, would you have bought any stocks during this particular period? And then I'm going to tell you what periods they are. You've got to ignore the news. You've got to look at your charts. And if your charts are saying, do that, you must do it. You put in your stops. You put in your buy stops. You know what your risk is. Case closed. That's the way it has to be. So, okay, we're about to wrap up. And most importantly, let me just run through these numbers again. The Dow, regardless of what the politicians say, had a real nice comeback today. That's going to mean nothing if the Dow goes back under 12,820, because then it's going to test the low of that candle once again. If the Dow is able to close positively today and use the 200-period exponential moving average to push even higher tomorrow, that's going to be good. Pulling back sharply says be careful. Watch the VIX index. We'll leave you with this. The VIX index into the 19s. I say be very careful. Holding in the 16s to 15s, good.